Good afternoon, everyone, and thanks for taking the time to hear the Canada Nickel story. So this is a brand new nickel sulfide discovery. The fundamental investment thesis here is that you get 1 or 2 good nickel sulfide discoveries per decade because they are relatively scarce, and particularly a high quality sulfide discovery. They tend to trade out at a very premium valuation, which we've seen occur in multiple nickel cycles. We believe we have one of the top discoveries of this decade, and we'll be entering a nickel super cycle as strong demand from the EV sector builds on top of already strong demand from the stainless steel sector to push nickel into a super cycle that happens every 15 to 20 years. We made the discovery. The discovery was made late 2018. We acquired this property in September 2019. In just 16 months, it's already one of the 8 largest nickel sulfide resources globally. We have significant exploration potential just on the main property, but we've acquired 5 other option properties where we identified a number of other high potential targets. And I think we'll have a very large district scale play before we're done. One very important dimension in today's market is obviously zero carbon. And so we're in the very unique position that the host rock of our deposit, which makes up 90% of what we're mining and processing, is made up of a mineral which, when exposed to air, spontaneously absorbs CO2. And so that, in combination with all of the electricity in the region being zero carbon hydroelectricity, will allow us, we believe, to produce a zero carbon nickel cobalt product and a zero carbon iron product, which will be very beneficial for the market. Because of my past experience of nearly 20 years in the nickel market and in advancing another similar project called Dumont during the past decade from a resource to a fully permitted construction ready project, we'll be able to aggressively advance and unlock value from our Crawford project. We'll have a PEA completed by the end of the first quarter of this year, and then a full bankable feasibility study completed by the end of 2021. The reason, in addition to being a high quality deposit, again, we fundamentally believe we'll be entering a nickel super cycle for the middle part of this decade, and we want to be ready for when it comes. And again, we think we're one of the best investment opportunities of a very limited set in the nickel space. Just very quickly on the nickel market, nickel has always been a very high growth metal driven by high growth in stainless steel. You can see it's much higher growth rates than you see for copper or for carbon steel. This is Glencore's forecast from a presentation a few years ago. They see over 1 million tons of nickel demand coming from EVs from a very small base today. So this is all extra demand growth that we have going forward. The key thing is when you take that trend demand growth, you layer in a certain amount of growth from the electric vehicle market, we will need to double demand, double supply by 2030 in order to meet growth from those markets. Indonesia has been an important source of new supply for the last several years, but we'll need to find another 1 million to 1.5 million tons of nickel from Indonesia, plus try and find some other projects in the pipeline, that could make it in time. So, our project is very well positioned to be able to take advantage of this new growth in supply. One thing that is increasingly focused on in nickel and hasn't been focused on in the past, is the carbon footprint of a lot of production. On the right-hand side, nickel's dirty secret, has been that more than 100% of the supply growth for the last 5 years has come from nickel pig iron in Indonesia. You need to burn lots of coal to generate lots of electricity to be able to process this material. And so with using 25 to 30 tons of coal per ton of nickel, you're looking at almost 90 tons of CO2 per ton of nickel. Again, sulfides, so the type of our deposit, already have an inherently low footprint, and because of the nature of our material to soak up CO2 and also the zero carbon hydroelectricity in the region, we expect to be able to produce an even lower carbon, zero carbon product. The thing with nickel supply is it's very concentrated. Robert Friedland talks about nickel as the new gasoline, given its important role in EV batteries going forward. And using that oil analogy, at its peak, OPEC, was just over half of global oil supply when it was able to do what it did to oil prices at that point in time. Investing in non-OPEC oil assets was a very good trade in the early 1970s. I believe a very good trade for the 2020s will be investing in nickel assets outside of Indonesia, Philippines, and New Caledonia. Those three countries are short of cash, will continue to dominate supply and have intervened in their mining sector, and I think they'll look to put some special royalties or special export taxes, which will lead to an opportunity for nickel producers in the rest of the world, to get even more benefit from nickel prices. So let me talk about our project specifically. We're located in an excellent jurisdiction in Ontario. We're just north of Timmins, which is a 100-year-old gold mining camp. We're literally sitting next to the highway with all of the major infrastructure in place that you need to build and permit a large mine. Within 200 miles of Timmins, 4 of the 5 largest gold and base metal operations have been permitted. You have Malartic, you have the Dumont project from my past life, Detour Gold, and then just recently IM Gold began construction on the Côté project to the southwest. So this truly is, one of the best one of the best locations in the world to build a large-scale mine. It's sat undiscovered because there's 30 to 50 meters of silt and clay from an ancient glacial lake that covered this area, and as well the larger yellow land package that you see that's owned by Noble Minerals was owned by a forestry company up until 10 years ago. So this area saw very, very little exploration. From the 5th drill hole that we put into this project when we acquired it in September of 2019, we've now added 1 billion tons of resource. This is one of the 10 largest sulfide resources globally today and one of the largest discoveries ever. We have a good quantity of contained cobalt and as well recoverable iron and platinum group metals in terms of platinum and palladium. One of our key focuses in our last round of drilling was really expanding the higher grade core of this deposit. This will be a large scale open pit mine mill operation, and in these type of operations, being able to supply, as high grade ore to the mill for as long as possible in the early years of the project life, really helps the project economics because all of that incremental grade translates into incremental free cash flow, which is what you really care about at the end of the day when you're building a big mine project. We recently announced that we've determined the potential extension of this high-grade structure another 800 meters to the northwest, and we'll continue to fill that in as the year goes on. We've defined much larger low-grade areas just to the west, and most recently, to the north of our existing resource in the main and east zone. So again, this is a deposit that's already very large and is going to get much, much larger going forward. The fundamental, thing in the market today is you now have BHP Billiton talking about wanting to focus on nickel, copper, and potash. There are very few large-scale nickel plays, so an opportunity like ours should attract the attention of the various majors who are all focused on battery metals. Our deposit is lower grade, and again, these type of deposits, you're not able to recover all of the nickel because some of it is in minerals that you can't recover, but the nickel that you can recover is in a very high-grade mineral that has will allow you to produce a high-grade concentrate. So our most recent test, delivered, what is the highest nickel sulfide concentrate announced at 37%. We're going to be targeting 35% over the overall project life, and then the other half of the nickel will be recovered in a standard grade concentrate, which will be targeted at 12 to 14%. So we're very happy with the metallurgy work that we've done to date, and we'll continue to unlock that going forward. In terms of the byproducts, again, we'll be recovering 15 to 30 tons of iron for every ton of nickel that we produce. Again, we believe we'll be able process that iron in a way that would be zero carbon, and would allow this to be a very premium product, that we would ship from the Timmins area. In addition to the nickel, we have a separate platinum group metal zone that exists at a certain mineral horizon. We've defined it across several kilometers of strike length. It'll be a very nice byproduct credit to our main nickel project. And again, we'll mine it as we mine the main nickel ore body going forward. In terms of our zero carbon approach, again, it's simply the combination of our rock's ability to soak up CO2, and when they're exposed to air, the zero carbon hydroelectricity in the region, and the fact that we can actually process material in the Timmins area to be able to take advantage of that tailings ability to soak up CO2. We have excellent relationships with the local First Nations. In my past life advancing the Dumont project, we were able to permit that project that was very well supported by the local First Nations groups, and we're off to a very good start here with the 3 local communities who are very supportive of our team, very supportive of our approach, and very supportive of the project itself. And again, this will allow us to advance it as aggressively as possible. We recently signed an MOU with Glencore. These projects typically have to start at a very large scale. You're looking at close to $1 billion. But we have the opportunity to use some spare capacity at the nearby Kidd Creek mill, utilize one of the circuits to get started at about 3,000 tons of ore a day, or million tons per year of material. That will allow us to get into production for a capital cost much closer to $100 million than $1 billion, and get started 1 to 2 years earlier than we would otherwise be to build the big project. So this will allow us to de-risk the flow sheet, understand how the mine and flow sheet will work, which will make it much easier to finance and build the much larger project that we ultimately want to build with this deposit. This is a chart that Vale used at a presentation in 2015. They were highlighting that the nickel discoveries of the past 20 years are half the size of the discoveries of the prior generation. Crawford is the largest nickel sulfide discovery since the early 1970s. We believe with the exploration potential, not only at Crawford, but what I'm going to show you in a few slides here, will allow this to be one of the largest nickel sulfide discoveries ever. You have Sudbury, you have the 2 Norilsk deposits, and then you have Jinchuan as well from 1960. And again, this is the kind of scale of deposit that we're talking about here with Crawford. We have 5 other option properties that we have flown the geophysics on. That little brown peanut there, that is what 900 million tons of resource looks like at this scale. We've got several excellent targets that we're going to drill this coming winter. And so we believe we'll be able to add another 2 to 3 of these types of resources to our overall resource mix as we move forward. We've done very well as a company. The stock has increased 9-fold from where we raised money initially just over a year ago. And we think we will continue to expand, much more quickly as we have, as I started. You get 1 or 2 great nickel sulfide discoveries per decade. Because they are scarce commodity, they trade out at a significant value. You had Voisey's Bay and a deposit called Kabanga in the 90s. You had Jubilee with a deposit called Cosmos, and Lion Ore with a deposit called Emily Ann and Maggie Hayes that they sold out at close to the peak of the last nickel super cycle. In the 2010s, you had Sakatti, which was discovered by Anglo American, and then Nova Bollinger. And that was acquired at a feasibility study stage for $1.8 billion. This is a great example of what that scarcity premium could look like. We have a tight share structure. We raised money last fall. We're in good shape through to the coming summer. So, to summarize, we think we have, one of those great nickel sulfide discoveries. We're rapidly advancing it. We'll be at that feasibility study stage, where these deposits often get acquired by the end of this year. We expect to continue to aggressively advance it in the coming years and be in a position to take advantage of what we think is a nickel super cycle. Thanks for your time, and I'll be glad to answer any questions.
Thank you, Mark. So let's get to the first question here. I think it's from Paul, and he's asking, you're targeting the EVs and stainless steel markets. Is the final nickel product the same or totally different? How does that work?
Yeah, no, the product will be nickel concentrate that's produced out of the project, and then it'll be a question of, we'll look to either partner with a battery company or stainless steel company to build processing capacity nearby Timmins and be able to process it into a final product so that we can scrub any CO2 from it with our tailings and produce a zero carbon product.
Sure. This one, because it's part of your main business model, I think you can elaborate a bit. So yeah. What's NetZero Metals? Like, he's probably asking, how is it possible to produce nickel with zero carbon? Maybe you can elaborate a bit.
Sure. Yeah, so what we're able to do is because we have all the electricity in the region is zero carbon, we can use electric trucks and electric shovels. And that allows us to substitute electricity for diesel fuel, which allows us to have a much lower carbon footprint than a typical mining operation. The mill is where you use a lot of electricity. Again, that will all be zero carbon. And then we have this great opportunity where, again, this ultramafic rock, when it's exposed to air, and we're going to grind it up very finely to separate the minerals that we want, our tailings will be, ideally suited to use all that surface area to soak up as much CO2 as possible. So it's the combination of each of those things that will allow us to produce a truly zero carbon product, and that, we'll be looking to use our NetZero Metals subsidiary to oversee those activities.
Okay. And this question is coming from Vivi Chong here. He's asking, if Canada Nickel is to be bought in the future, what will need this resource size of the company needs to grow, or any other metrics that need to be different or need to grow for the company to be bought out?
Yeah, I mean, we're already one of the 10 largest nickel sulfide discoveries ever. So we would already start to be on the majors' radar screen. At this time, any additional increase in resource will make us just that much more attractive. And again, with that resource being large enough already, that's why we're already starting to work on the PEA and the feasibility study on the initial resource that we've already defined.
Sure. One last question here from Vince. When will we be expecting more news on NetZero Metals?
You'll see news flow. We're doing lab scale work right now to prove out some of the concepts that we have. So you'll see news flow sometime during the first half of the year, and then you'll continue to see additional news flow from it, as the year progresses.
Thank you, Mark. I think that's pretty much the questions we're here for today. I think it's a great story for investors to cheer in.
Thank you. Everyone have a great day. Take care.
Thank you.